In today's video, I am going to be breaking down my 5 stock picks for this month of February. I personally believe that some of these stocks may be a bit speculative, while others are pretty solid long-term investments. Let's get down, let's check them out. In the short term, this first one I think is a bit speculative. However, in the long term, I think it's a fantastic stock. Enbridge ENB is absolutely fantastic. Their volume is through the roof, and their dividend is 6.4%, which is absolutely amazing. However, I have broken down this stock many times in the past, mainly because I personally believe that this stock could be fantastic for the future because they're starting to invest heavily in solar, wind, and other renewable energy sources. We've seen their 5-year chart before. We've seen this double bottom during the pandemic. It has rose since then, and also whoever bought right there was getting a buy of the century, I think, because that quick bounce was fantastic to see. My dad bought it somewhere around there, and it's going to continue to rise, I think, in the near term, mainly because of oil prices continuing to go up, but also the long term because of their renewable energy investments. And their dividend is absolutely amazing. Their next dividend's coming in February, and year over year, if we look at November to November, it has rose a bit. If we look November to November once again, it was a much larger increase. And then if we look November to November once again another noticeable big increase. I personally really like this stock a lot. If we look at their earnings before 2020 when oil prices went through the floor, basically you're looking at a company that was having higher revenues and higher earnings, which is something that is beneficial to the future. If 2020 and maybe even 2021 were not in line with the past 3 years prior, I still believe that this is a fantastic company. 3 last beats, 1 miss. So another good thing that has been coming from this. We'll have to know until February 11th if they can hit 4 in a row. Imperial Oil is a short-term bet. And with this one, you are getting a dividend while you're waiting for the stock price to go up. But I think that it's been proven to be a solid company long-term as well. Obviously, volume is, of course, through the roof, proverbially, because, of course, 1.5 million shares is crazy. The PE ratio versus others isn't exactly crazy either, but it is up there in price. Their 5-year chart was going down. This was, of course, because of the certain politician named Trump down in the States. He was opening up a lot of different oil fields when it came to fracking, and that was really cutting down the price. However, since then, there has been a change in leadership who closed down those same oil fields, and of course, because now we are now again relying on international oil, Saudis, and OPEC, that price has, of course, increased of oil, and so has the price of many of the different oil stocks. I really don't think that there's going to be a change in trajectory of this stock price or even oil prices in general, mainly because we don't see the governments opening up new land to mine, and we are still relying heavily on international oil. And there is potentially a war in Russia, which again, Russia is part of OPEC, and that just means higher oil prices. And the other reason why I say it should be good long term is if we look at these dividends, especially through 2020 and the last half of 2019, the first half of 2021, if we look at those dividends, they essentially froze their dividends and of course recently raised their dividends. The reason why I'm saying this is because a lot of oil companies during the 2020 year and the first half of 2021 lowered their dividends because of the cost of oil and because they were making really not much money when it came to the cost of oil. They lowered their dividends, and of course here we see IMO, Imperial Oil, actually keeping their dividend the same and slightly increasing it in 2021, which is fantastic. They have clearly a very solid balance sheet. We can see 2020 wasn't exactly the year that they were probably looking for, and of course 2020 was, of course, just absolutely terrible. 2019 was not great. However, beforehand, 2017 and 18, it was rising. And if, of course, oil prices continue to rise in the future, you will see also the stock price of this stock rise. Now, we did see 2 misses recently, 1 beat and 1 meet. So, of course, something to really look at is in April. if they can hit that target. If they do, then this stock price might continue. But it all does depend on what's happening clearly over in Russia, because apparently that's moving the oil market. Apparently a possible war moves the oil price before the war actually even starts. So I don't know. If there's no war, if there's nothing that happens over there, then oil prices, I would assume, would come back down. And I really wouldn't be surprised if a smaller nation, maybe a country like Argentina maybe, will start maybe pumping more oil, potentially to make more money, because of course they're not going through the greatest of times right now. And if they pump more oil, then they can make more money, in which case the price of oil would go down. And of course the Saudis and Russians and everyone else would get mad at them. Manulife is another company. Again, this is more on speculation on my side, but it is a very solid long-term company anyways. MFC is their ticker, and 5% dividend, 8 million shares traded on average every single day. And the speculation on my side is this. People are generally going back to work, or at least their businesses that they started during this pandemic are succeeding. So between the jobs that they're going back to and, of course, the businesses, people are going to be needing insurance. People are going to be needing benefits. And when that happens, well, guess what? Manulife succeeds. There's big companies that use Manulife for benefits. They're going to be hiring more people back. There's a huge labor shortage right now, which means that just pretty much anybody is hiring. So because of that, I think that this could be a good short-term investment, and it's a solid long-term company anyways. In the long term, it generally, at least 5-year wise, it doesn't move all that heck of a lot, but you are getting a dividend, and if you can get it when you are near, of course, the bottom, or at least nowhere near the top where it's been, then of course it seems pretty solid to get. They also do have a nice habit of increasing dividends, which is very handy. We can see that from 2018, it went from 22 cents now to 33 cents, so it's gone up 50% in the past 3 years, which is fantastic. And their revenue and earnings is through the roof, and through a pandemic, which just makes you kind of look at them and say, well, if you can make money then, why can't you make money after the pandemic? Which is actually a very good investment thesis. If you can find a company that has had fantastic earnings during the pandemic that is not a tech company, then what's stopping them from continuing after? And even when it comes to tech companies, it just basically shows how much of a need that company was needed, or needed to be used. And in that case, they're still going to have that need afterwards. Nothing's going to change. People are going to be working more remotely. Yes, I understand people work better when they're in groups of people. I understand that. But there's still going to be the need for Skype, or the Zoom. There's still going to be needs for all that. And it just basically showed the world how much you could work online and not have to go to an office in New York City, where in reality you could have your house in Florida where it's nice and warm and don't have to deal with the foot of snow that they recently apparently got. By the way, we're getting a foot of snow over the next 2 days as well, so yay. Next is Canadian Apartment Properties, CARUN. Anyways, so basically this one's another one, 2.5% dividend, and 350,000 shares traded on average every single day. PE is kind of low in my opinion, but there's a short-term and long-term reason behind this pick. In the short term, there has been, of course, a lot of people who have not been able to pay rent. And because of that, the Canadian government and Ontario government, whoever, I wasn't keeping track, was covering a lot of their rent and a lot of their living wages, and of course so that they could still pay rent and probably not still be able to buy food. But anyways, at least they could pay rent. Well, their earnings did go down because a lot of people were not able to pay rent, and they were also not allowed to kick people out. And because of that, now those people either owe a ton of money and they'll eventually maybe pay that amount of money, which will up their earnings, or artificially up their earnings because it was back pay, or what could happen is they could kick all of those people who were not paying their rent out and get people in who were paying their rent or are going to be paying their rent. And because of that, they'll have better earnings. So in the short term, they seem pretty solid. In the long term, if you really think about it, if there's another recession, let's say we have a housing crash in Canada, which we should hopefully maybe have something like that happen sometime soon so I can get the house that I'm looking for and not live here, so I can have a big property and a basketball court and I can have thousands of videos made. That would be fantastic. I run a basketball YouTube channel that's bigger than this one. But from there, I would like house prices to come back down a little bit. It's getting expensive. But either way, basically, there's going to be a lot of people, and even in recessions, that will have to lose their houses. That's just what happens in recessions. And when that happens, those people can't just go out and get another mortgage. They're going to have to go out and get a rental unit somewhere. And that's what Canadian Apartment Properties does, is they rent to people. And those people need to have a place to live. And that is what's going to happen most likely. Actually, quick story. I had a friend whose family member owned a lot of apartment buildings throughout Hamilton, Oakville, and Toronto. And one of the things that he told me, this was probably 15 years ago, was he made more money coming out of a recession than what he made before recessions. Because basically what happens, and it's sad, but this is just how it happens, that people will be living in an apartment unit for 5, 10, 15, 20 years, and they can only increase those rents by, I think it's like 1 or 2% a year, whatever the legal limit is here in Ontario. And when somebody gets evicted and kicked out of their place, that landlord can raise the rent higher than what that 1 or 2% was. So, for example, if you were living in an apartment building for 10 years, you're actually getting a really good deal because they're not allowed to raise the rent over a certain amount of money. However, once you leave, that landlord is going to be able to make more money because he can actually increase the rent. So let's say you were only increasing by 1 or 2%, but the actual market itself's gone up by 20%. Then now when you leave, that apartment building owner will now be able to make more money to a tune of 10, 20, 30, 40, 50% more. So because of that, you make more money coming out of recession than you did when you were in a recession. And that was the thing that he taught me. Over the past 5 years, this stock's been doing ridiculously well. Of course, during the pandemic, it didn't do so well. It's been lowering once again because, again, this is when people are starting to, in my opinion, why it's going down is because people are starting to probably get kicked out of units. However, once this sort of levels off, once those tenants are gone or at least paid their money back, this should rise once again. So in the short term, it seems pretty strong. In the long term, we can see it's a very strong company. And we can see that they do pay a dividend every single month, and they do tend to increase their dividend as well, which is fantastic. Their earnings were through the roof in 2018 and 19, but what I really like to look at is their revenue, and if their revenue is going up, and which it is, so that is fantastic when that happens. Next is CIBC, but we have to look at CIBC as not just that single bank. I really like CIBC. Basically, it's one of my top holdings. However, I'm not just saying to buy this specific bank. What I'm saying is to obviously do your own research, but Big Six banks in general tend to do extremely well. They've proven that they can handle a recession, and they've also proven that they can make a killing during a recession when literally nobody was working. So basically, this seems like a very strong company for the long term, but in the short term, a lot of the banks had a little bit of a pullback, and now they're starting to get pushed higher once again. And you can't deny their dividend increases were just absolutely crazy, but this one's currently sitting at 4%. The reason why I'm mentioning CIBC versus the other banks is because the PE ratio is lower than, or at least lower than most of the other Big Six, and the average volume is nice as well. As we can see, there was a little bit of a pullback, but again, now it's starting to accelerate once again. It's hitting probably all-time highs over the next couple of days anyways, but either way, this stock itself was going sideways before the recession, before the pandemic. However, since then, it has accelerated just like every other bank. This is why I actually say nice to be diversified. National Bank of Canada was actually increasing during that time. And that's that crazy dividend increase that we all seen, and pretty much every news station was obviously talking about it. They generally increase their dividends every year, but CIBC sometimes does it every every 6 months. I don't think that's going to be happening right now, but of course it is something that has happened in the past. Their revenue is again hitting all-time highs, same as their earnings, and the only thing that's concerning is the recent miss on their earnings, but they did have 3 beats prior. Anyways, these are my picks, these are my thoughts and my ideas. Remember to do your own research and to never trust a random person online. Hit that like button, subscribe, and I'll see you guys again next time.